been completely gone out. So now the entire trajectory will be dictated by how we are able to move on the core CPI numbers.
Okay, I might just read out to you the index numbers of the elements of the core CPI. Well, for those of you who don't have to follow this very closely, the core CPI refers to, medical care, education, recreation, transport, household requisites. Those are services basically, and they don't change as much as the food and fuel prices, obviously. So that is what you call core CPI, and Reserve Bank tends to look at it to check whether genuinely the price level in the system has come down. And there perhaps you two economists will have some advantage or some benefit. Medical care from 126.1 in January has gone up to 126.7. Education has risen from 129 to 129.4. Recreation has gone up from 118 to 118.6 to 118.8. Well, actually, everything has gone up. Transport has gone up from 130.4 to 130.8. Personal care has gone up from 126.9 to 127.3. Household expenses has gone up from 134.4 to 135.1. And other miscellaneous has gone up from 151.7 to 152.7. So quite clearly, miscellaneous has increased from 129.8 to 130.3. In any case, if the base effect is favorable, if it was a high base, then perhaps that explains the core inflation coming down from 8.11 to 7.9. Given this combination of both the food inflation coming down, Ashish, and the core inflation coming down from 8.1 to 7.9, if that indeed is the number, do you think there is scope at all for a rate cut?
I think so. I don't think so. There is a scope for rate cut. It's too early to talk about a rate cut. Inflation is trending down, yes, but absolute inflation remains high. And I guess RBI will wait and watch to see how the trend continues. Just one number is not a good enough signal. And in any case, the eventual objective of RBI is to get the inflation to significantly lower level, which is 6 and 4 eventually. So, I think 8 is still a very high number. So, most likely they will be on a wait and watch mode, to see further numbers.
Okay, Samiran, I just actually wanted to get your opinion on the IIP data, because if you look at the parameters within the IIP data, it seems as though it's better than what we did in the previous month. So, for example, for example, intermediate goods is up 3.4% this month, and it was at a 4-month high in the previous month as well, or 14-month high in the previous month. Consumer durables have contracted, but contracted less than what they did last month, 16% last month and 8% this month. And not to mention, electricity has continued growth, and manufacturing is down 0.7% as opposed to 1.7% in the previous month. Based on these parameters, does it look on a headline basis that IIP has performed better than what it had in the previous months?
I think if you look at the details of IIP, the two areas where I see significant improvement or noticeable improvement is one on the intermediate goods side, which I've always maintained is a better leading indicator of the next IIP movements. And the second part is a substantial improvement in the consumer durables, consumer goods side overall, particularly on consumer durables, where from a deeply negative territory, we are now moving to somewhat of a flattish growth. So the December quarter miserable performance of consumer goods as a whole in the first quarter of 2014 has started somewhat better. It's too early to say whether this is a sustained improvement or not, but at least the decline that we were observing, that decline seems to have been arrested.
Okay.
Okay. Well, Saumya, any word on how the rates might move? Even before I come to the rates, how the CPI might move if the core indeed has come down from 8.11 to 7.91, and headline has also come down to 8.1. What's the next move next month and the month after?
Yeah, I mean, just a small point on the CPI data, which may be of interest, is that if you look at the historical data of the core CPI and the headline CPI, the difference, the minimum difference, I mean, that the lowest level was around 11 basis points. So that, so if we take that into account, and if we are assuming that the core CPI continues its downward trajectory and reaches 7.66%, which was at the historic low, I think, in January 2012. So by that 11 basis point logic, the CPI should actually be at 7.80%. So I think the further downside to the CPI will be limited until and unless the core CPI declines significantly, because it still is trending, is almost flattish, and most of the decline has been because of the base effect. Now, having said that, the further rate actions by the central bank will depend crucially on the CPI trajectory, because I still believe that the numbers, and given that the food prices, with the spike of the food prices which has declined, and there is a possibility that it may decline in the summer months, and also the crop loss because of the hailstorms and all those which has happened recently. There is now a distinct possibility that food prices may reverse the trend, and if that is the case, in that case CPI may witness a upside, and which will so basically I'm saying that it's the ball is still in the central bank court to decide on the rate action.
Okay, so you're not sure of any rate cut, you wouldn't forecast a rate cut in April, you're saying?
No.
Okay, well, Samit, all right, got it.
Absolutely not.
Okay, I think now we are getting confirmation. There are other economists also who are saying that the core inflation indeed is at 7.9, and these are people who are at their table and not in front of a TV camera. So we are looking at a CPI core inflation of 7.91%. Samiran, is this the start of a downtrend, and therefore what is your guess of the future trajectory of CPI?
Well, the way we are looking at it is that for the next 1 or 2 months, this trend can still continue. But this is, for the full year, it's a much tougher call to make, because unlike WPI, the CPI projection is fraught with the difficulty of 50% weightage on food, which essentially is a function of weather. And there we are hearing not just the unseasonal rain factor, but also the possibility of El Nino disturbing the monsoon pattern. If these things play out, then possibly the food inflation can pick up again. That remains one of the big risks. But I really do not think that the correlation between food inflation and so-called core inflation is very obvious here. So in a positive scenario, what can truly turn out is that food inflation does not go up, keeps on its downtrend, and that brings down the headline CPI along with it. But in our view, the gap between the policy rate, which is running at 8%, and the headline CPI will have to be substantial for RBI to start thinking of cutting rates. As long as inflation stays above the policy rate, it is very hard for RBI to consider cutting rates.
So what you're saying is you don't expect a sub 8% in March or April?
It could be sub 8, but it has to be substantially lower than the 8% threshold. So at least a 50-100 basis point gap should open up for RBI to be comfortable about easing rates.
All right.